Bob, I didn't know you still had it in you. I thought you lost your groove for good.
Long day so far, Rye.
You know, when Bob's cranky, the podcast doesn't go as well.
Yeah, and he loves when you egg him on and give him a hard time. That just makes it so much better.
By chastising Bob, he only gets easier to deal with as we move along.
The beatings will continue until morale improves, Dad.
I actually think that's a good philosophy. Feed people into charisma and excitement.
That's right. Should be our motto here at Payne Management.
Welcome to the weekly edition of the Payne Points of Wealth podcast, the podcast that addresses all the pain points that come along with creating, growing, and sustaining your wealth. Hosted by the family wealth experts of Payne Capital Management, Bob, Ryan, and Chris Payne. Please send us any questions or comments you may have to questions@paynecm.com. And please enjoy this week's episode.
Certainly past the deadline on Liberation Day. We're supposed to have like 90 deals done. We literally have had 3, and I don't even think all 3 are actually written down. So I don't even know if it's like an official. The Vietnam one supposedly is done, but no one's seen that the tariff is actually like any sort of formal agreement that's been written. So I guess the question is, where are we with tariffs now? I mean, is this working? Is it not working?
Well, of course they are. I mean, come on, the business of America is business, right? We have a $70 trillion market for a reason. So, that's, when you look at all these companies are export dependent. Who's the biggest client in the world? Of course, they're going to come to the table, right? I mean, Trump's going to make it as hard as possible, and he's trying to cut the best deal he can. But the market's already moved past it, right? We had that big surprise factor. You had the black swan event already. You're not going to have another black swan event on tariffs, whichever way they fall out, but they're going to be resolved. The market's already past that. They're already factoring in things that we don't know yet.
Yeah, no, it's totally true. Because I mean, look at the market, right? It's barely reacted this week, even with the fact that we've had more uncertainty with tariffs. And Chris, I've heard a lot of people say that Trump is playing 4D chess. He's just so far ahead of everybody else, this master plan. Or I don't know, is he just winging it? Do you think he just gets up in the morning and he's just making it up? I mean, is there a strategy here to actually get these tariffs done?
I think Trump gets shocked every day by how slow things move in politics. And I think that's the reason why this thing has taken so much longer than it already has. And I bet there's probably some wiggle room in those letters to say that, maybe that August 1st deadline is not the actual deadline. Maybe.
Well, there's just a headline that came through on my phone while we were sitting here that said that Trump said he was not extending that deadline. But I'm pretty sure we heard that about the other deadlines, right?
What's that recurring phrase? Taco. Trump always
chickens out.
Yeah,
always chickens out. But I mean, I think this is actually, a lot of people argue with this, but I actually think that's one of his assets. You never know what he's going to do. Like, you have no idea on any given day. Like, I thought, okay, we got past the big beautiful bill. We've got a breather here. We're not going to have to worry about turmoil in the markets for another day. And the next day, what do you hear? Trading partners, August 1st. If we don't have a deal by then, your tariffs are going to like 30%, 40%, whatever. So it's just like, I think the one asset he has is always expect the unexpected. You never know which way the wind's going to blow, Bob.
Yeah, but this is the ultimate ignore the noise, right? I mean, nobody's better at creating noise and chaos than the Trump administration, right? You have, first we're going to sign a deal with India. According to Bessent, we're imminent. We're going to sign a deal with India. And then Trump comes out yesterday and says, well, if you're doing trades with the BRICS, or, you're doing trades with these other companies, we're going to put an extra penalty on. So he's already, back channeling on a deal that we're going to do with India, saying if you trade with India, then that deal's off. I mean, it gets very complicated, but it's all noise because, all he wants to do is keep that chaos going until he gets the deal that he's looking for.
And maybe that's what he does in the morning. He wakes up, he sees what news is going on. It's like, how can I create chaos? To your point, Bob, you have Brazil, Russia, India, and China meeting for their annual meeting down in Brazil, talking about trade and talking about what benefits those countries, what doesn't benefit the U.S. And what does he do? He goes for attack. He goes right into attack mode, and now threatens more tariffs. So I think, to your point, we're getting to a point where the markets are probably numb to this, right? We're getting to a point where the market, it kind of doesn't really trade on the chaos anymore because and you said it to me earlier, Chris, well, your clients are amazed that their portfolios are up this year. Like, how can it be with so much insanity that's going on in just 6 months of the year?
Well, I think to your point, people have just gotten numb to it. Trump is crying wolf. It's like, oh, Trump's going to say something crazy again. We know it's going to be crazy. We know it's going to be wacky. We know it's going to be unspooled, and we're used to it.
And meanwhile, if you look at the economy, I mean, I don't know, Court, is the economy doing well? Is it not doing well? Are these tariffs literally going to crush earnings? Like what, I don't know what's going to happen from here.
I mean, you're not seeing any of it in the data thus far. The economy is still on really good footing. And I think if anything, people are starting to look ahead to the second half of this year and saying, okay, the Fed might be cutting a rates, which is a good thing for the economy. Inflation's coming down, which is a good thing for the economy. And growth is actually still doing really well, which actually kind of this perfect scenario. So I think the only what if is, do these tariffs affect inflation, which is a part of that picture? We don't really know yet, but I think at this point, markets are saying, we don't think that's a big concern.
Well, I don't know where Ryan gets off saying it's not impacting the market. We were down 500 points on Monday, which is only a whopping 1%. 500 points isn't what it used to be. We're all the way up to almost 45,000, which was the all-time record high. Because, I was talking to a client the other day, he's like, man, this market's down so big. I said, what are you talking about? That's nothing. Right? That's one day. It's a blip on the screen. So it's it really has already been priced in my opinion.
Yeah, I mean, chaos has been priced into the market. Check that off your box, right? When you're putting together your investment portfolio. And, if you actually look at the fundamentals of the economy, it's probably as benign, or I want to say Goldilocks, as you can possibly have right now, right? I mean, interest rates have stayed relatively low, which is remarkable. We had a lot of people calling for inflation. We may have inflation again at the end of the year. I would argue it may pick up at some point, but at the time being, interest rates are in check. We've talked about oil prices, absolutely in check. They're at the lower end of the range, like $65 a barrel is super cheap oil when you think about the global economy. Unemployment, we thought the jobs number came in phenomenal this week, right? So we have unemployment tick down a little bit, and we know wages are continuing to go higher. Like, it actually doesn't get better than that when you look at the big picture economically.
Boy, it sounds like Trump's really on a roll here. He got his big beautiful bill is now big beautiful law, and he's bringing the tariffs back. I mean, he's got low inflation. Things are on a roll here for him.
I think that was the whole thing with his argument with Elon Musk. We didn't cut enough in this big beautiful bill, but what Trump's been doing is delivering on the campaign promises he made. Right, he shut the border down. He's got the bill passed. I mean, these are the things that he campaigned on. So quite frankly, as a president, the guy's on a roll.
It depends on what media you watch, Bob. So I'm not sure everyone would agree with you. I would almost just say, despite politics, I'm a bigger believer that businesses like us are the ones that are really driving the economy. We navigate around politics. In a lot of what we're seeing right now with earnings going up, if you look at the 12-month projection on the S&P 500, despite tariffs, earnings are going up because we have a lot of innovation right now, right? We talk about every week, but artificial intelligence, can't say the word right. You look at robotics, right? We look at all the different types of technologies being implemented right now, Courtney. And I think the big picture is whatever happens on Capitol Hill, American business always figures out a way.
And that we've actually always talked to clients about this. Like, historically speaking, you don't want to invest based on who's in office or whatever politics are. I would argue that probably over the last several months, politics have been affecting the stock market short term more than they typically do. But like, this is what we're talking about. Clients are shocked that their accounts are up this year because it's all been short term, and businesses have been able to move past it. And I think they will continue to do so.
Well, do you think that business drives the economy more than politics, or politics drives the economy more than business?
Oh, business and consumers are absolutely what drives our economy. And that's what you're investing in at the end of the day, are these businesses.
Then why does every politician on TV take credit for the fact that when something's going good, it's because of their policies, Chris? I don't get it.
Well, you and I were talking about this past weekend. We're taking a long walk on the beach, and you were saying that
romantic long walk on the beach with my brother.
Two
hairy middle-aged men
holding hands. We weren't holding hands. But no, you made a good point. You said that government is not business. Like, people always say that the government should be run like a business, and it is not a business.
Well, Elon Musk learned that the hard way, right? Yeah. Wait, you want to cut costs? Wait a second. No, this is government. We don't cut costs here. No, that's not what we do here at the government. Yeah, we increase costs.
Yeah, so I agree with Courtney. The government, I would say, is anti-business in a lot of ways, and I think it's the consumers and the businesses that drive business.
Well, I think Courtney, you just nailed it. I mean, it's the U.S. economy, the consumer, our business model that drives the global economy. We're the ultimate consumer. And that's why all these trade deals are going to get done, because you can be the lowest cost provider. You can make the best product, but it doesn't do you any good if you don't have anybody to sell it to. So, what it all comes down to is you just go back to one of our major Payne principles of wealth. And that's it. No one knows. Let's face it. No one can predict what's unpredictable. No one can know what's unknowable, right? It's always our best guess. But next time you're watching the boob tube or you're watching the latest, TikTok video, just remember they're making it up as they go along because no one knows.
What I'm really excited about is the American Party, Chris. I love patriotism. So I think this American Party is a very interesting idea, right? Having another political party. We have a two-party system. All of a sudden, Elon Musk, he's very, very angry about the deficit, which is climbing, where we have $37 trillion in climbing. So I think there's this war going on now, right, between President Trump and Elon Musk about, continuing to add to deficit spending. So do you think this is more about Elon Musk being upset about getting his EV credits going away, his electric vehicle credits going away, or do you think he really cares about the American people and the fact that we continue to add debt to our deficit?
I think it's more about the debt than it is about the EV tax credits. And I only say that because he spent how much time trying to cut costs from the government only for them to just add more to it. I think that's his whole point. You can kind of see that.
I'd be pissed.
Yeah, right.
Yeah, I think too, I think Elon Musk is also a little bit pissed off at Trump. So it's a little bit of an FU to Trump. But, I also think too, if you've ever read the book about Elon Musk, he hates waste, absolutely despises waste. He thinks that you should cut too much and have to add things back in.
Well, I think the question is it going to, and we talked about this last week, Bob, now we passed the big, beautiful bill. Does it even matter? Right? Does it even matter? Is it going to change the trajectory of the U.S.? Right now, we're in a very dominant position. Is this $1 trillion that we have every year in interest payments on the debt, which is insane? Is it going to get exacerbated? Are we going to continue to add to the debt and we're just going to keep cruising along?
Well, the whole purpose of this bill was to promote GDP growth, if you really think about it. They're making their big bet.
Economic growth, American growth, right? Yeah.
So it wasn't really intended, as a cost-cutting bill. And I think that, I think that's something, hopefully, that they'll do later. It's always going to be hard. Like we talked about it last week. Every congressman, every senator, their job is to bring more money to their district. And they're going to continue to, feed at the trough whenever they can, because all they really do care about is getting reelected.
No, you're right. But I've heard this narrative. They have these rescission bills that are going to come out and they're going to cut. You know how much they're estimating they're going to cut? $9 billion. That's nothing. So it's complete BS when politicians tell you that later on, we're going to go back later and we're going to start cutting. We know we just added, $3.5 trillion, whatever it is, to the deficit over the next 10 years. But, we're going to pass all these other bills later that are going to address that. And that's just not true. Well, what's $8-9 billion when you're talking about a $37 trillion deficit? Chris, can we even depend on these politicians ever to cut costs? Or is it always going to be the narrative that we're going to grow our way out of these type of situations?
Well, I think we talked about this last week. Politicians are inherently self-interested, and it's actually bad for them to cut these costs because, inevitably they're going to lose voters.
But I do think at some point the rubber has to meet the road because we know what compounding interest looks like, right? And if you have $1 trillion deficit and you're not paying it down at all, well, that $1 trillion of interest payments or $1 trillion of interest on the deficit, it's like a credit card payment, right? That 10% credit card payment where you're never paying it down or you're never paying down the principal, what happens is it keeps compounding on itself. And that's what nobody's talking about. I think Ray Dalio is one of the only people talking about it. He says that every year we're going to have $10 trillion worth of interest expense. So at some point here, the math doesn't work, Courtney. So do you think that actually is going to be a problem sooner than later?
Well, the reason that it's a problem is interest rates are really low right now. There's a lot of debt very short term that's coming due. And so think about that. If you're having to refinance a credit card into a higher interest rate than you were paying before, that's what's happening to the government. So not only do they have more money they're adding to the debt, but they're adding it at higher interest rates. And that's going to be a problem.
Yeah, because Bob, you're not paying down any sort of principal on the deficit. You're just adding to it. That's insane.
Well, the problem with the deficit it's something that's been on everybody's mind, for the last 50 years. And every politician, the way they handle it is they kick the can down the road. It's like, I know this is an issue, but I'm not going to solve it because I want to stay in power. So nothing's going to happen until we get to a crisis, because that's just the way Washington works. Now, they may try and inflate their way out of it and print dollars, kind of what they did, back in COVID. But there's a reckoning coming, but nobody knows when. And I think kind of the conventional wisdom on Wall Street now is I'll worry about it when the bond market worries about it. And right now, the bond market is showing some strength. So it's that's supposedly the canary in the coal mine.
So, I mean, Cord, do you think it's realistic that we can grow our way out of the deficit? And that's kind of what the party line is right now, that we'll somehow just have such high economic growth that we're just going to pay this deficit off and ride out into the sunset.
Well, I think that's the argument, right? That's what Trump is assuming, is that he can grow his way out of it and that this bill is going to stimulate the economy enough to grow it compared to the amount of deficit we have. But that's where Elon Musk is saying, no, it's not going to work. We have to cut spending. I think, like anything, the truth is probably somewhere in the middle. You probably do need to grow the economy, but you also do probably need to cut spending. So now what we're probably going to have is two now opposing parties who are fighting both options. Now you're going to need another party who comes in the middle of those two, and it's just, I don't know where it ends.
I don't think anybody does, but I think, if I'm a betting man, it's hard to bet against the American economy long term, right? I mean, if you look at the track record, despite politicians, despite their ability to spend, it seems like, and especially right now, given the fact that we are at this like big crossroads when it comes to innovation, productivity, and cost cutting within the U.S. economy for businesses, we're on the cusp of something really big, and I think it's a real positive.
Well, I think it comes back down to the Payne principle of wealth, that there's no free lunch, right? There's going to be implications of this debt that we don't fully understand. Now, whether we inflate our way out of it, grow our way out of it, or just basically default, there will be an end. We just don't know when. But just keep in mind, there is no free lunch.
Hey, hope you're enjoying the most recent episode of the Payne Points of Wealth podcast. Everything you hear on this podcast, along with some due diligence of your own, can help you get ahead financially literally at any stage of your journey. But if you want a more hands-on approach and you saved over $1 million for your retirement, Bob, Chris, Courtney, and I will run for you our total financial master plan, and we'll do that with no obligation or cost. It's a full holistic review. We literally look at everything. We'll go as far as building you your own personalized financial portal. We'll give you a bird's eye view of your entire financial life and hone in on every financial issue you need to address today, whether it's an income plan for retirement. How do you take Social Security? How do you draw from your portfolio, factor in inflation, and don't run out of money? We'll look at diversification. Markets have been wild over the course of the last couple of months. Has your portfolio been up and down? Or have you been sitting in cash, CDs, money market funds, paralysis by analysis? We'll put together a full investment game plan. We'll show you how to grow your wealth, but most importantly, protect it over the rest of your life. And we'll look at fees and taxes. Wall Street loves to sell you high cost, tax inefficient products, whether it's an annuity, mutual fund, insurance product, structured product. We'll do a deep dive of every investment you own. We'll show you how to reduce the cost and optimize your portfolio for taxes. It's not what you make, it's what you take. You'll get a full tax playbook, and we'll do this full review at no cost. We'll literally go through everything for you, do all the work up front. Simply go to www.paynecm.com/financial plan or click the link below to see if you qualify for a free financial review. One investment strategy that hasn't worked that well are small caps, right? Small cap stocks, which are more tethered to the economy. They really haven't gotten back to their all-time record high yet. Meanwhile, we have record highs in the S&P 500, the Dow Jones, and I was always suspect because like a year ago, every firm on Wall Street was talking about how small caps were ready to have this big rebound. And of course, when everyone on Wall Street believes the same thing's going to happen, it doesn't. And I was one of those. I was also saying that small caps were ready to poise for this big rebound. It never happened. But now it does look like we are starting to see a turnaround. And Bob, I think a lot of it goes back to the big, magnificent or beautiful bill, whatever we want to call it. Some of the tax incentives in there actually are good for small caps from what I'm reading. Do you think it's a good time to buy small cap stocks?
Yeah, because it all comes down to this this new interest expense they're able to expense more of that interest, which actually adds to earnings. And, small company stocks tend to have more debt. So, if interest rates come down, that benefits them. If they're paying less in tax, then their earnings go up. And again, price is driven by earnings. So I think, especially small cap value, you got one of the buying opportunities of your lifetime right now.
Yeah, there's kind of two things I think that'll affect small caps. So one, there was a change in this new bill to how they can deduct interest. So I won't get into the details, it's kind of boring, but it changed it from like EBIT to EBITDA. But basically, a larger amount of their interest is now going to be tax deductible. And that affects smaller companies more because they have a larger amount of debt on their balance sheet than bigger companies. So suddenly they're going to have more of a tax break than your bigger companies do. And also, it's expected the Fed's going to lower interest rates this year, which means all that money they're borrowing and on their balance sheet, they're going to be able to refinance at lower rates, which would be a very good thing for small companies.
That's a good point because they borrow short term typically, and that's at a floating rate. So if you cut the rate, that actually adds to their bottom line as well. What's interesting to me, Chris, is like I feel like most people don't have a lot of small cap stock exposure in their portfolio. So do you think this is going to change things? Do you think people are going to start to say, you know what? I love NVIDIA. I love my growth stocks, but it's time to, add to something that's underperformed for a very long time.
Rob, like the 60 portfolios I think we look at every month that we propose to our prospective clients. I think I found maybe like 2 or 3 that actually had like a decent amount of small cap exposure. I think it's going to be one of those things where like, it's going to be like once the train's left the station, that people are going to be talking about.
I mean, but what do you think? I mean, it's hard to get people to buy what they don't want to buy.
It's really why most people underperform as an investor, right? I mean, you sit there and you watch the financial news and if they bring up small caps, I'm not buying small caps now because they haven't gone up. I mean, that's like the dumbest statement I think I've ever heard. I'm going to invest in it after it's already appreciated, and all the opportunities gone. That's when I'm going to jump in. And it's just the way investors justify their thinking, right? Because large cap growth did well until this year. People like, the only place to be invested is in large cap growth or the S&P 500. Everything else you should just ignore. Meanwhile, we get the buying opportunities that exist every day, and you ignore it until the opportunity's gone.
Yeah, well, it's something you once told me back in the day is, and this is when we worked at Merrill Lynch. Now the stock has gone to basically zero. It was bought by Bank of America. But you would always say, why does the CEO have more money than you? When I worked at Merrill Lynch, Dad. And you would say, I would be, well, he gets paid better. He's like, no, he has more shares of the stock. And I think what we forget about and we discount is the fact that the compounding of dividends, which, by the way, those growth stocks don't pay many of over a long time, especially when the price is lower. Like small cap value pays close to a 3% yield, which is pretty good. You've been compounding that for a long time. Then all of a sudden, the price of that part of the market goes up. All of a sudden, you have all these shares. And there's the exact dynamic that we saw with international. We've owned international since we started our firm 17 or 18 years ago. It was underperformed forever. And then all of a sudden, within a couple of months, dramatically outperformed. And you have all those years of accumulating shares at those lower prices. So I'm wondering, do you think investors are going to be proactive or reactive, Courtney?
Well, I think generally speaking are reactive. And I maybe it's just how our brains are wired, but have you ever been sitting in traffic, right? And you're sitting there and you're stuck and then the lane next to you starts going. So you turn to that lane and then it stops. And then the lane you were just in starts going. It's the same thing with investing. People see the things that are going up and they say, I'm going to get into that. That stops growing. And then the thing that you were just in, like international or small caps, whatever it is, that's now your best performer. And that's why you're better off sticking to your lane and having a strategy of where you're trying to go rather than jumping to one thing or another.
Yeah, I mean, I can't tell you how many calls that I've had over the last 10 years of people saying, you know what, I don't want to own anything but the U.S. The U.S. is the place to be. There's no opportunity outside the U.S. And to your point, they always want to be in that one lane that's going fast. And as soon as they get in there,
well, I think the other question, too, is when it comes to small cap stocks specifically, and I love that analogy, by the way, is they're very tethered to how the economy does. So I think the big question, Bob, is do you think the U.S. economy is going to grow or it's going to accelerate, right? We had negative growth for the first quarter, but over the course of the rest of the year, do you think the economy will actually pick up speed?
I think, Rod, with all the recent legislation, right, you're going to see more deregulation, probably going to see more M&A, interest rates, in spite of the pounding Jerome Powell has received from the Trump administration. He doesn't have to do anything because interest rates have been coming down on their own, right? The bond market's been rallying, especially on the short end. So you got lower interest rates. This is all very pro-growth, right? So I think if you're going to bet on the growth of the country as measured by the gross domestic product, GDP, I would be taking the over, from Vegas on that bet, not the under.
You know what, Bob? I like your odds. I'll take the over as well. And Courtney, I think one thing that a lot of people are talking about is, do you think Jerome Powell, the Fed chairman, will actually lower interest rates?
That's the big question, right? I mean, I think
what's your over under on that?
The expectation is he will cut this year, and I do think that probably will happen. But I think what investors also need to remember is last fall, they cut rates 3 times, yet interest rates, longer term rates went up. So they only really affect the short-term rates. What you really need to be watching is the bond market and what's happening with inflation longer term. So whether they cut rates or not isn't actually the question.
But I think it also goes back to what you're saying before about how these small cap companies actually borrow short term. So it's actually very stimulative if the Fed cuts rates. Now, if that's stimulative, that goes to what you said, Bob, is economic growth goes up more, which is inflationary, if everyone's following this, which actually pushes up longer term yields, which would be one of the unintended consequences of lowering rates. And if you're right, Courtney, and the Fed is going to cut, then yeah, I mean, we could probably see long-term rates go up. And I talked about that last week. Bob, do you think Jerome Powell cut? And do you think it's because it's for the good of the country or because he's politically motivated?
Well, last I checked, the interest rates decision is not the chairman's decision. It's the Federal Open Market Committee. So you have all these Fed governors. I mean, what are they going to do? They're going to replace all the Fed governors, right? The one Fed governor doesn't have sway, over the committee. So, you have to replace everyone. But, on the positive side, if you look at inflation right now and you take out housing, it's or rents, we're looking at under 2% right now on GDP. So why do we need rates up on inflation? If inflation is so low, I think it gives him an opportunity to cut, right? Because we're basically at the Fed's inflation target, if you do the math a little differently.
Yeah. Well, I think the great irony though is if he does cut rates, and it sounds like he might, is that's actually going to spur inflation. So I think it's like he's between a rock and a hard place. I think the reality of it is stimulative. It is going to cause inflation. So I think maybe one of the unexpected events this year is at the end of the year, we're talking about higher inflation again, not lower inflation like we are right now.
The other thing I also find interesting, guys, is that when you have one portion of the market outperform, like large cap tech companies did, the investors in that area, they start to make up stuff to justify, that strategy. Like, I have all my eggs in one basket. And the reason is I don't buy small company stocks because, there's no more IPOs, right? So companies don't become small cap stocks and then become an IPO. They stay private, right? They make these things up. Well, the fact of the matter is all markets go up over time, and the best time to buy them is when they're down and when they're out of favor. But when you come back to the Payne principle of wealth, we talk about diversification. Remember, diversification is the only hedge against uncertainty. And if you have all your eggs in one basket and you drop the basket, a lot of eggs are going to break.
Hey, hope you enjoyed episode 210 of the Payne Points of Wealth. If you like our podcast, you love our podcast, please give us that 5-star rating on iTunes. If you're listening to us on Spotify, you can give us that 5-star rating, subscribe to our channel. And if this is on YouTube right now, you can like this episode, subscribe to our channel, and click that notification bell to be updated every week of all our new content. Your support gives us the support to continue to do this podcast. That's it for this week. As always, stay loose and keep an open mind.
Thanks for listening to the Payne Points of Wealth. Hopefully you found the ideas discussed in this episode valuable and useful for your own financial journey. You can find out more about Bob, Ryan, and Chris's firm, Payne Capital Management, at bebullish.com or through the contact information found in the description of this episode in your podcast player or app. Join us next week for another episode of The Payne Points of Wealth, brought to you by Payne Capital Management. Information provided on today's show is provided for informational purposes only and does not constitute investment, tax, or legal advice. Investment is obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed.